Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. Yo, I'm banging heavy bass. Put your head up to the speakers and stand in the bleachers. Begin to spin your t-shirts. I'm ripping you flipping creatures when delivering you new features. And I'm showing how I'm feeling when I'm in the spot to rhyme. Taking every deal we see, baby, send the DocuSign. Hopping in the block to mine, turning watts into coins. Nothing stopping your boy when I'm popping the ploy, cause I'm savvy. Train the market with the data, cause I'm classy. Trade is sparking with the beta, see I'm sassy. Packing coins into the truck, check the chassis. We're rolling heavy, never luck. Yo, I'm humble with the bragging, even though we're always winning. Yo, we're veterans and chapping, no, it's only the beginning. Starting pistol, early inning, never grinning. Competition, always swimming while we're high up where the atmosphere is thinning. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. Orkun Kilic, CEO of Chainway Labs, co-creator of Citrea, the first ZK-Rollup on Bitcoin, is our guest. It's a great conversation. I should disclose Galaxy Ventures led their recent investment round, so they are investors in Citrea and Chainway. Of course, we'll also check with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk about markets and macro. Bitcoin all-time high, new all-time high this week. That's a rare thing that I get to say. 69,338 by my count, surpassing the 69,000 flat from November 2021. Before we get to the show, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Man, it's hot in here because we're heating up, Finn.
That was a great wrap, first of all. Well done.
Thank you.
Nobody needs to know how many takes we did. Could have been the first one. We don't know.
It could have been. It's like
exactly.
the Schrodinger's cat, right? You know, the wrap is either one and done or it takes 50 tries. You don't know until you open the box.
Absolutely. And I will say, you know, the mood since this all-time high and the climb to it, the mood in this office and with you and Bim and other folks that have come on the show seems quite singular. And I wanted to ask a question.
Yeah.
What is the non-financial take on the mood, the euphoria, like emotionally? How is everybody doing?
Well,
how are you doing?
Yeah, it's been a wild ride. I think I described last Wednesday when we recorded our previous episode, the one that ran last week with Commissioner Hester Peirce. Last Wednesday was a crazy day. I think Bitcoin ran up to 64 and then nuked back into the mid to low 50s. It was just, I described it as almost a sense of panic mixed with euphoria. Yesterday, as we're recording, Tuesday, March 5th, where we broke this all-time high, also an incredibly volatile day, right? Ran up to 69,300, dumped $1,000, traded at 59.2 at one point. Right? And then recovered, paired losses. Now we're in the $67,000 range. So look, as we go higher, a smaller percentage move is required to move a lot of dollars around. But I would just say, look, this is a long time coming. Many of us are true believers in the future of Bitcoin and public blockchains, and we really did endure a very brutal bear market, something like 846 days since the last all-time high.
Yeah.
So, I mean, that's a long time. And we know the carnage. We won't rehash it, but a lot of carnage happened during that time. So I just want to tell everybody we're back.
Yeah.
Really, we never left. We shouldn't have left. Well, we didn't leave. You can go back and watch our episodes.
Yeah, nobody lost faith, it seems.
Well, but it's the story rolls on, my friend. And look, some people want elites, the entrenched interests, they want you to believe that the world as it is today, it's in its final state, that institutions will always be there, they're permanent, that systems are secure, that every problem has been solved. That is the tendency of existing power. But I'm here to tell you that all revolutions disrupt existing power structures and ways of thinking. Don't buy the hype. Every single advancement in human history, major advancement, was incredibly disruptive, and it flew directly in the face of that lie that the system always wants to tell you, that everything is in its right place. There's always more to be done, and I believe Bitcoin is a major advancement that will also equally revolutionize. Let's get right into the show. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
Man, it's been continues to be exciting. We said this. So we're recording on Wednesday, March 6th, but on Tuesday, March 5th, yesterday, Bitcoin made a new all-time high. I have to call it out because that's a rare occasion. So 69,338 is what I have, the new all-time high. That was Coinbase's price at a point on Tuesday morning, surpassing the previous all-time high, again, using Coinbase, of 69,000 flat. A lot of volatility, though, yesterday. A $10,000 move. We shortly thereafter traded as low as 59,200 before pairing losses and trading right back up to the 63K range. Now it's 67,000, basically. I don't know. What's your reaction?
I think this, what price action wasn't easy to call, but the writing was definitely on the wall or on the cards. Generally speaking, when you have a market, skyrocket just over a certain period, and when these types of assets hit resistance levels, especially ones as significant as a prior all-time high, like you rarely take those out on a first go.
Yeah.
It generally requires multiple tests. And so seeing a big sell-off into resistance after leverage got insanely overextended with funding rates and OI at super elevated levels, I think that was just, par for the course.
Mm-hmm.
And I think, in terms of what you saw with 60K essentially holding is characteristic of an asset that has been institutionalized. What do you typically get when you have an institutional asset class is you get a bunch of dip buyers, right? Institutions, aren't the types of folks trying to pay the highs.
Mm-hmm.
Like they buy dips, they wait for corrections. And so, I think seeing a healthy bounce off of 60K, seeing strong ETF inflow numbers.
Really strong.
Suggests that, there are dip buyers in the space.
Tuesday was the largest net inflows into the ETFs since day one.
Yep.
So day one was larger by like 10 million, again, on a net basis.
Yeah.
Huge volume, by far the biggest traded volume day in over $10 billion worth of volume traded on those ETFs on Tuesday. Truly wild.
I mean, it's insane. And again, another sign of institutionalized, right? The deeper the liquidity, the more liquid. Obviously liquidity, part of it is, how much price impact you have for something you trade. And so clearly we're having a lot of price impact. But the volumes are such that, it's acceptable for folks to traffic in decent size in it. And so that generally begets more institutions. And so everything you've seen so far is healthy. And I think that the macro landscape is certainly helping as well. Gold is at an all-time high now, right? Broke through 2,100.
Yeah.
And basically everybody is like, oh my God, do I need more gold in the portfolio? Do I buy gold calls? And I think the reason why gold's up there, it's not because U.S. rates are crazy bid or we've priced out, we started the year around 7 cuts priced in. You're at 3.5 now, or 3-ish. And, that would have generally been supportive of gold lower, but that's not what's happened.
Mm-hmm.
And so, what I think is happening is just the world coming to grips with the structural reality of the fiscal situation.
Yeah, Bitcoin and gold both all-time highs on
Yes.
Tuesday, March 5th. First time they've ever hit all-time highs together. Makes sense. Bitcoin
and S&P and NASDAQ are at all-time highs. So it's a risk asset and a debasement hedge.
Let's go to your point
And
about what is you said the fiscal situations are becoming apparent globally.
More,
What else is out there that macro is concerned about?
I mean, the general supply of fixed income, right? I think I read some stat. There's 40% more treasuries that are going to have to be absorbed by the market than mature in this month of March alone. And that's not including corporate debt, right? And then the Fed on top of that is reducing its balance sheet. And then, you throw in what's happening with the regional banks and stuff, and they don't have strong appetite to buy paper, the BTFP, just went away. Dealers have strong appetite or not. But anyway, it's a lot of paper to absorb for any institution or any reserve level that the Fed can reasonably run
What's
at the
the
moment.
stat they're saying that now that every 100 days the U.S. is adding $1 trillion to its national debt at this point? That's the rate. That's shocking.
Shocking. And then you just keep running the math on that. The math gets worse by the day.
Right. It gets a shorter time period to add that trillion. I mean,
yes, but it's also just like then it's your debt servicing, like, and with the interest rates so high, right? As debt rolls off, right, that was lower yielding, the Fed has to issue all these bills and other treasuries that are far higher yielding than those that are maturing.
So this creates though a fear of what if we play it all the way out, of parabolic debt can't be serviced. So then governments have to pay more to service it. So they have to cut back on other stuff, and that leads to recessions and turmoil, or raises taxes.
And then also,
eventually it leads to revolution, basically.
Potentially, but it's also in theory, what's your best way out of a lot of debt? And we've seen the story in EM. It's a lot of inflation.
Yeah,
and devalue your currency.
I see.
Right,
so then
gold and hard assets should do well. And the argument for hard assets is it gets better every day.
Yeah.
And if Bitcoin's part of that hard asset narrative, then it's game over. Because I don't know about you, but I would put my life on savings on politicians continuing to want to spend.
Right.
Especially going into an election cycle.
Yeah.
And there's no in the political reality that we live in, there's no world where getting the fiscal situation right becomes a priority for both parties.
There's the one guy in that South American country, Argentina, Javier Milei.
Oh.
He's the only one I've ever seen dramatically win on effectively a massive austerity.
Yeah, but it's just
why? Because he's fun. He was also fun. He wasn't wow, the only way to do this.
I don't. You can't
compare
you can't.
That
to. No. But I tell you, if you go to Europe and you shill austerity,
no appetite.
That's just no, go away.
Here too.
But here's totally the thing, and the other problem though is it's just so structural, right? A congressman's got 2 years,
right?
Right. He's got to run for re-election every year.
There's an old thing, and I'm sure this has changed, but when I studied poli sci, this was 20 years ago at this point, but it was some stat that was an average congressperson when they get elected has to basically raise $6,500 a week in order to get reelected. And that actually forces a lot of them to not even be in Washington very often, spend most of their time back at home raising money.
Right. Yeah.
So you got two strategies. You raise a ton of money at home, or you basically make a name for yourself on television in Washington and raise national money that way.
Yeah.
Those are basically, and so they have to spend all of their time. By the time they get elected, they got to immediately get elected again. And
so
that really makes it hard to do policy, and it makes it hard.
How are you going to solve one of the biggest policy challenges we're going to have over the next couple of decades?
Yeah.
And then it's also just as a function of who's getting elected, who's in power. It's people that have benefited from 30 years of insane fiscal spending and packages and low rates and low mortgage rates.
The average age of a member of Congress and the Senate is so high.
They're not thinking about the debt profile they're going to have when they're dead and what their kids are going to have, and at least. As well as somebody that was younger.
Well, and at least collectively as a branch of government, they're failing to act on this question.
Young people don't vote as much.
Well, right. No, I get it. The incentives are all misaligned to solve this problem.
It's crazy misalignment.
Oh, man.
And so, I'm going to stick with hard money. I'm going to stick to Bitcoin, gold, and other hard assets.
Right. Cash-generating equities. People love equities for this. Equities are a good hedge.
They're fantastic fiat debasement.
That's what Warren Buffett has always said.
Yeah, here's the thing. Bitcoin's just another version of a fiat hedge.
Right.
And some prefer it over, equities. And but the main point is, I'd rather be in liquid fiat hedges that I can move around in good size and trade 24/7.
It's pretty nice. You can't
the right to privacy and
holding assets. And if you actually needed to, let's say you needed to spend you can just send your Bitcoin. I can't pay someone an Apple stock if I have to.
No, you can't.
It's much more useful.
Much
with
more
gold, by the way.
Yeah,
I'm going to mail you a coin.
Yeah, it's just it's the future, and people are seeing it. Yeah, and so that's kind of what's going on, macro-wise and
very
and whatnot. But so you never know when this fiscal stuff becomes the main focus of the market. And I think what you'll see happen when the market really wakes up to this is a massive re-rating in U.S. interest rates and the curve, most importantly.
Mm-hmm.
I think as more people realize the future of the U.S. is shakier, you should have a higher term premium, right? And so 30-year bonds, oh, wait, I'm getting paid, 4% and change for 30 years, like, is that going to compensate me for the rate of inflation we're likely going to have?
It really need like 5, 6, 7% theoretically.
Yeah.
Yeah. Does that wreck mortgage rates also? Makes it harder for everyone to buy?
It should, yeah. I mean, think about this. We have now, like, there are now economists calling for no rate cuts this year because the data is still super strong.
Yeah.
We haven't seen a collapse in housing, even though housing affordability has gone down a lot.
Right.
Because people still want homes like crazy.
Right.
And there's also just tons of like wealth built up and liquidity built up and et cetera. And so, like, yeah, those rates are going to, it's going to be an issue to bring them down because raising them hasn't really had that much of an impact. Right. But yeah, over the long run, like, I would expect rates to stay high and maybe even go higher. The question then, what you're really coming to is the Fed's inflation target of 2% even reasonable?
Right. And they get close to it in the end.
And right now, it's looking like you might get close to 2, but you're going to hover above 2.
Yeah. And
so, like, targeting 2, does it make sense? Are you going to be more comfortable with 2.5, 3 in the world we live in? Right. And that's kind of, what other folks are debating as well.
Beimnet Abebe from Galaxy Trading, my friend. Thank you for coming on Galaxy Brains.
Thank you for having me.
Let's go now to our guest, Orkun Kilic, CEO of Chainway Labs, co-creator of Citrea, the first ZK-Rollup on Bitcoin. Orkun, welcome to Galaxy Brains.
Hey, Alex. Thank you for hosting me today. It's great to be here.
Thanks. Great to have you, and I'm excited to talk with Orkun because there's been a lot of buzz about this new wave of L2s that people are building on Bitcoin.
Yeah.
I guess some of this could have been built in the past for a variety of reasons. Certainly, there have been L2s on Bitcoin, whether it's side chains or merged mined side chains or other types of and obviously Lightning Network, a payment channel network.
Yeah.
But really born out of the launch of inscriptions, there's really a huge now upswell of interest in doing more on Bitcoin. Before we get into it, what's some of your background, Orkun, that you've been before you guys started building Citrea at Chainway? What's your story in Bitcoin and in crypto?
Yeah, sure. I'm Orkun. I'm from Turkey. I live in Istanbul. So I was an engineer before. I did web development for years. But 4 or 5 years ago, I got into crypto or blockchain. I was developing smart contracts on EVM chains, developing some core protocols on blockchains for blockchains, UTXO blockchains. Then almost 2 years ago, we founded Chainway Labs with my 3 other co-founders. And then we knew we want to create our own products, and we were very interested in with Bitcoin and privacy. So in the almost in the 6 months of 6 months of Chainway, we built a privacy protocol on EVM chains. Then this inscription thing came out, and once we see it, there was only 100 inscriptions on the mainnet. So we already have a node in our office. So we just downloaded our software, started indexing, and immediately finished. So we tried to inscribe several things. And we realized that the UX is not that great for end user. So we started building a wallet around it. It was one of the first wallets that support ordinals. It was an extension wallet, ordinal safe. So we put it together. Then we realized, okay, we know ZK well because of privacy. And we know inscriptions and Bitcoin script well. What if we can combine these skills and build some efficient DeFi on Bitcoin using inscriptions and ZK? So the idea evolved, and eventually it was a sovereign ZK-Rollup, which is you have access to all the meta protocols, but you don't have access to BTC. This was before BitVM paper come out. Yeah. Then Robin released the paper. We immediately realized we can verify the proofs here, so we can have a trust minimized two-way peg. And we immediately started researching and building, and right now it has evolved to Citrea, Bitcoin's first ZK-Rollup.
Such an interesting story, and the BitVM thing we'll get into in a second. But when you unpack, just for our listeners who don't know, and by the way, we have good research we've published on these different types of rollups, but when you say sovereign rollup, my understanding is it's kind of like a side chain in that sense. It doesn't derive direct security. It may post, say, block headers and stuff, sort of checkpoint into the main chain. Is that what that is? But it has its own validator set and security. Is that fair?
So it is definitely more secure than side chains. and because you directly inherit the data guarantee and consensus guarantee of the underlying chain, which is Bitcoin. But the thing is, you don't have access to Bitcoin. So in, let's say, like specialized DA layers, this work well because the DA layer is kind of like neutral and it only jobs is to like post blobs. But in Bitcoin, not having access to BTC is not great. So because what makes Bitcoin important is the asset BTC, the $1 trillion asset in the main chain. So in that sense, I think sovereign rollups are like secure, but their use case is limited with like BRC20s or other activities. I don't think they are secure, but their use case is very limited. Yeah.
So, and then the ZK rollup side, just versus say a pure optimistic rollup. Obviously, there's, I guess, what do we have? ZK Sync era has launched. This has long been heralded as the holy grail of L2 design, but you see great enthusiasm behind existing like optimistic rollups like Optimism and Arbitrum. Is ZK, what's so great about ZK? We know what zero knowledge technology can bring for privacy, but that's not the primary use when it comes to a rollup.
The primary ZK use case in rollups is the compression and efficiency it provides. So let's say you are an optimistic rollup. To create these fraud proofs, you have to dump all the transactional data to the L1 so that anyone can access, right? But in ZK rollups, you don't have to dump the data because of security reasons. You can just put the data somewhere if you believe like you can get it later. It doesn't affect security. It affects, let's say, liveness and like it can froze the funds, but the security is not affected. So ZK rollups make the underlying block space usage very efficient. This is one thing. And the other thing is, I think you can enshrine this like ZK light clients to everywhere, because once you have this proof, you can verify it on Ethereum, even on Bitcoin and other chains, so that you can have like this multi-settlement thing that you can access to liquidity everywhere. You can interconnect all the blockchains with ZK. I think that's why ZK is kind of more important for us than optimistic rollups.
So let's get into Citrea and the design here. So it is a ZK rollup. You're going to post, we'll talk about Citrea versus the Bitcoin L1, how it interacts. But on the Citrea side, once you've bridged to Citrea, what kind of experience are we talking about? Is this an EVM compatible or equivalent or whatever? Let's not get into the details, but is this basically the same type of functionality that you could get in, an Ethereum L2 for the most part?
Yeah, our target is have the EVM equivalency, which means you can copy all your applications from Ethereum and migrate to Bitcoin using Citrea. So all the applications will run exactly. There are like some minor difference in blocks that doesn't affect the applications. But I think this is important to access all these applications and developers. So we are building an EVM layer. And Citrea is the first ZK rollup on Bitcoin. We call it, in a technical sense, trust minimized ZK rollup because of BitVM. And in the future, we want to evolve this a fully trustless ZK rollup, which I can talk after all this Bitcoin stuff.
So inside the Citrea environment, there are validators that secure internally? Is that how it works?
There are no validators or miners in Citrea because you directly inherit the consensus guarantees of Bitcoin. You don't need that. So basically, there are sequencers in the Citrea. Initially, there will be single sequencer, but in the future, there will be multiple sequencers. So they basically sequence your transactions, and you don't need a confirmation for that. You don't need votes. You don't need proof of work, because eventually all these blocks get proven under ZK environments. So you don't need to do all of this stuff.
So then they post, I'm just looking at the block clock here as we record. We're just making new all-time highs in Bitcoin. So it's a sequencer. The sequencers, like in other rollups, they arrange the transactions and then they post the proofs to the Bitcoin L1.
Yeah, they basically hand over the transactions to prover. Then prover generates a proof for it and inscribes it into Bitcoin.
And who are going to be the provers in this?
In this initial scenario, there will be single sequencer and single prover. But we have a plans to introduce a multiple sequencer network, which can sequence transactions in a round-robin fashion, so that any prover can take these blocks and prove permissionlessly and inscribe into Bitcoin.
And then from the bridge standpoint, this trust minimized bridge, right? So that was sort of I would say, very high level overview of the architecture inside the rollup. But how, first of all, just mechanically, how do I move Bitcoin from the L1 to the L2?
Yeah, you have several options actually. The most easy option, if you don't like own any Bitcoin L1 Bitcoin, so you can directly onboard to Rollup using off-ramp, on-ramp solutions and centralized exchange because you don't need on-chain transaction unlike Lightning. And the other thing, the second easier one is use atomic swaps. You can atomic swap from Lightning or main chain. And the third way is the BitVM-based bridge that we are building. So basically you lock your UTXO in an atomic sense. So operator can move this UTXO into a BitVM program. And once it do that, there is a pre-image revealed. So that using that pre-image, you can mint your wrapped Bitcoin on the rollup. CBTC, we call it Citrea BTC. If operator doesn't accept your Bitcoin, then you can claim after the time lock. So it is kind of atomic.
Yep.
Your Bitcoin cannot get stolen during the deposit operation.
And what are the security guarantees? I know BitVM is very new, but I've seen a lot of discussion about this. Of that, like, what does trust minimize mean, right? Can you, what if they all the operators of this bridge or the operator of this bridge, are malicious, right? How can I get Bitcoin out?
So this trust minimized term is very abused by all like existing L2 players. So let's say Rootstock says we are trust minimized because we have like hardware security module, which is incorrect. And Stacks also says this SBTC thing is trust minimized. They basically not, because you assume the majority of the multisig is honest. So your threshold is somewhere between like 60% or 70%, right? But in BitVM, it allows you to have 100% threshold multisig without having a liveness failure. So this is like kind of technical explanation, but basically you either need all the signatures of everyone, or anyone that disagrees with the transaction can put an on-chain computation so that the transaction are either prevented or the malicious verifier is kicked out.
So you just need one of the multisig.
Yes, this is honest minority assumption we call. You only need one honest member. Let's say there are 10 verifiers, and let's say Galaxy is one of them. Yeah. And if you trust Galaxy, then your funds is definitely safe.
I see. And it could be whomever, but as long as one of n number.
Yes, exactly. You don't need to majority trust. You just need to trust one person.
It's really interesting. The BitVM paper came out, in like September or October?
5 months ago.
Yeah. Quite interesting. Love that you guys are on the cutting edge of some of these new. I mean, this is a paper. Has anyone?
Yeah.
You guys haven't deployed the BitVM bridge yet, right?
Yeah, exactly. So BitVM kind of existed as a paper. So it was like Robin's idea of a computation. Then it also become the name of the VM itself that Robin is right now building. The VM has two parts, basically. One is the off-chain and the other is on-chain part. Off-chain part is just like any other VM that runs in your computer. But the on-chain part allows you to have a succinct fraud proofs, the interactive fraud proof game, for you to verify all this off-chain computation in a like succinct manner. So they are building this. Off-chain part is almost complete, kind of feature complete, but on-chain part is not complete. But as we know, the like instruction set and off-chain part, we started immediately building on it, like it is ready. And once it will be like proof of concept ready, we will deploy it onto our testnet, so it will work in a like trust minimized way, enable the first trust minimized way.
So it's very interesting tech. I can't wait to see it get really used. Has Citrea actually launched?
No.
I see that you've released code.
Yeah, we first introduced Citrea, like the documentation. I think it is the first documentation that is revealed on like Bitcoin L2s and rollups. Many like project copy paste our like documentation and stuff. And in this month, we will open source our code base, full code base, starting from the BitVM ZK verifier, then our bridge program that operator and verifiers run, and the third is the Citrea full node implementation. So in this March, we will open source everything. And hopefully in April or May, we will launch testnet.
So the idea is that if all the code is open source and documentation and all that for these various aspects, then anyone can launch a Citrea-based rollup?
Yeah, they can.
And then Chainway Labs, though, will be building one as well.
Yeah, we don't like afraid of open sourcing our code. Like even though people can deploy, I think it's good. Yeah, they can improve the code. They can find like security issues. They can fix the security issues. They can contribute. So we will open source our code, and everyone can take a look and contribute.
I like that. Anybody who's capable can decide whether they like it or not and use it or not. Let's talk about that Well, actually, before we talk about usage, let's talk about some of the controversy that I've
Yeah.
seen in the Bitcoin community. There was a thread Gabe Parker on my team had written about Citrea's announcement a few weeks ago, and in that thread, Luke Dash Jr., I would say the loudest sort of Bitcoin developer critic of inscriptions, Gabe asked him, well, would you be as opposed to something like Citrea if they had posted the fraud proofs to the opportune field, which is prunable and has been, was raised and sort of was historically speaking, the accepted and approved place for arbitrary data storage on Bitcoin prior to the invention of inscriptions.
Yeah.
Is there a reason why can't you use the opportune?
Yeah, so in this ZK-Rollups, like I said, we compress the data as much as possible. But to get the full Bitcoin security, including liveness issues, you have to reconstruct your L2 state just by looking at the Bitcoin L1. So to ensure that we have a proof, which is almost like 200 bytes, which is very small, but then we have a kind of huge state diff part, which is still way smaller than optimistic rollups data, but it is still, let's say, in high usage, it might hit 1 megabyte. So we will need to post this data to get the full security. We can omit this data as well if we want in the future. But in any ways, OP return field is not enough for us to publish this data.
What is it, 80 bytes?
Yeah, 80 bytes. It's in the standard. I think you can push more with minor cooperation, but in a public pool.
Yeah, Bitcoin nodes won't route a transaction that's over 80 bytes. Yeah, it's the data carrier size limit.
Yeah, exactly. Yeah. So I don't think this is kind of use case of inscriptions or similar to ordinals because, we are inscribing data. But unlike, let's say, BRC20s, we don't need to create fresh new UTXOs for every single operation because we only need to make sure that every full node downloads this UTXO and have this witness data so that they can verify the proofs and add up to their state. So we will just inscribe to same UTXO over and over. So it won't create new.
From the UTXO set standpoint, it doesn't create giant bloat.
Yes, exactly.
Yeah, that's good.
And also witness is prunable. So once you download it, you can also prune it.
That's true for all the inscription data in general. So just mechanically too, how often and how much would you be inscribing theoretically each? Is it every Bitcoin block we should expect a ZK proof plus some additional data?
Yeah, to avoid this kind of expensive data usage, so we need to compress as much as transactions as possible to have this small state diff so it grows sublinear. So we are batching this. Let's say it can hit in every 4 Bitcoin blocks or every 5 Bitcoin blocks, and it can be every single Bitcoin block as well, depending on the usage of the L1. So we basically post these proofs and state diffs into Bitcoin. And after some time, we aggregate this proof over the Bitcoin base layer so that it can have this single recursive succinct proof, and we can verify it into BitVM, very easy manner. So this is the current architecture. Then how we post, it depends on the L2 usage, but I don't expect it will be every single block.
And would it be the 200 byte proof plus a megabyte of data each time you post?
It also depends on the usage.
Yeah.
So
depending how much data you actually have to post.
Let's say everyone using the same pool on Uniswap, then the state diff will be way smaller because the changing account is you only need to post the initial and the latest because all the intermediary steps are proven in the ZK. But if everyone uses a different Uniswap pool, then you have this much data. I cannot say exact number, but we sampled several Ethereum blocks and applied in our ZK system and compress it. So if we do 10 times more than Bitcoin TPS for 10 minutes long, then we will only take 1 megabyte of block space.
For every time you post?
Yeah.
Got it. Okay, let's talk about usage and demand for these new capabilities. We have had things like Rootstock, and which is an EVM compatible sidechain, right? I guess a merge mine sidechain, is it?
It's merge mine sidechain.
And so there's EVM compatibility, I'll say. Though it hasn't seen over the years that it's been around significant usage. From where do you see the demand for something like Citrea on Bitcoin deriving from?
So like you said, we have this Rootstock EVM chain, Stacks, Clarity VM sidechain, and maybe lots of other sidechains that I don't know. But with inscriptions, we saw that people don't want to use alternative block spaces like rootstock. Okay, they are merge my sidechain, but what you post into that block space keeps in the rootstock network. What you post on Citrea keeps in the Stacks network. Stacks, sorry. So people want to use Bitcoin. People want to like inscribe their data into Bitcoin, even though it's like financial transaction, inscription, BRC20, I don't care. People want to use Bitcoin, and this is good for Bitcoin. So in the longer term, if you move this demand to sidechains, then you're basically killing Bitcoin because they compete with Bitcoin. They don't pay fees to Bitcoin. They only inherit demand from Bitcoin in a one way. So we think NL2 on Bitcoin should add something to Bitcoin, not remove something from Bitcoin. This is why rollups are like kind of important. They batch all these transactions, make them as succinct as possible, but still send it to Bitcoin. So Bitcoin still gains fees. People will still be using Bitcoin block space, but they will be paying less and making fast transactions because you have this compression layer on top of Bitcoin. I think that's why Rootstock and Stacks failed over the years. Even though like the inscription came out, they couldn't manage to load this demand from Bitcoin because people knew that they are unsecure solutions. They are not Bitcoin. They are not Bitcoin equivalents. It is some alternative block space. Rootstock is no different than Ethereum if you put a multisig bridge between Ethereum and Bitcoin. So that's why I think they didn't get any demand, even though they're EVM or other VMs.
Do you think that the growing usage of Bitcoin L2s will come from existing Bitcoiners more or from Ethereum users or other alt L1 or other block space users?
I think both, yeah. Like while we are building Citrea, and like after this all Galaxy investment on seed round, I realized that I am building Citrea for myself. So why this came out? Because I have BTC in my portfolio, like a big amount of BTC, but it sits in my ledger, right? I don't want to use WBTC on Ethereum because you both trust Ethereum and the WBTC, the centralized entity. So I want to use my Bitcoin, but there is no alternative that I can use it with Bitcoin security and also with the trust minimized bridge or like wrapping mechanism. So that's why we are building Citrea. Everyone has BTC in their portfolio, every crypto blockchain user, whatever you say, but they don't have a trust minimized alternative to use their Bitcoin in finance. And Bitcoin is, we believe, the real currency, but without having an economy around it, you cannot say this is a currency. Okay, it's a payment protocol, but if you cannot do more, like everyone wants to borrow some USDT with your BTC, but they are going BlockFi. This is not something good for the industry, so we need to have a non-custodial and decentralized alternative of those. This is because we are building Citrea, and I think demand both coming from like all BTC holders, even though they are like Bitcoin maxis, or Ethereum users.
Do you think there will be, like Optimism's talked about, what do they call it, their giant ecosystem of optimistic
Super chain?
The super chain, right? The idea is that, Optimism mainnet or whatever we call it, right, post to Ethereum as a Ethereum-based rollup.
Mm-hmm.
But so does Base, which uses Optimism technology. And maybe there are others, I don't know. But I think part of their vision is that, well, sure, they each roll up to Ethereum or somewhere, maybe eventually, like Celestia and not Ethereum. But you may, rather than going from Optimism back up to ETH L1 and then back out to Base, maybe you go directly between the L2s. First, not using Optimism's necessary terminology, but like lowercase superchain. Do we think that all the L2s will connect? And then, of course, will Citrea connect? Will it be easy to move from Optimism or Arbitrum or Base to Citrea?
Yeah, I like this kind of topics because in the previous Bitcoin L2 landscape, we haven't been talking about this. Like drive chains proposed years ago, but no one asked how this like Zcash kind drive chain will connect with EVM drive chain, right? You have to go to main chain, then go to here, and withdrawals are too long and stuff. So no one talked about this, and with rollups right now, we are able to talk about this, and this is important. Thank you for asking. So in our case, in Citrea, we kind of acknowledge that the ideal scaling solution is a combination of fractal scaling and volition model, which is kind of technical, but I will explain. Volition is you basically have this single runtime, the EVM runtime or EVM plus runtime, whatever, but you divide the Merkle tree into two, so you have one off-chain state and one on-chain state. If you want your account to be as Bitcoin secure, with Bitcoin equivalent security, you basically choose the on-chain state route. So your transaction data is compressed and go to on-chain. But if you are, let's say, using a gaming smart contract and you don't care about that, then you can post it into off-chain. So in this way, everything is still ZK proven. But you kind of scaled all this L2 because you don't have to post all this data to L1 anymore if you don't want. And the fractal scaling is basically deploying a bunch of L3s with alternative DA layers, alternative runtimes, depending on the use case. And the good thing is we can borrow all this tooling from Ethereum. Like there are shared sequencer mechanism, and you can basically copy it and paste it into Citrea, so all the L3s can have this shared sequencing mechanism, so they can be interoperable. But in the L2 level, we want to enable this evolution so that we have this on-chain and off-chain data, and it can do maybe, let's say, 1,000 times better TPS than Bitcoin without going any L3 or L4 or other disconnected solutions. But if you want to deploy your L3, then there's lots of toolings that you can connect this L3 with other L3s.
Here's another topic and question I know you will have thought a lot about is MEV on Bitcoin. And
Yeah.
what the what MEV might look like in a state like you've described with interconnecting, but also many L2s that bridge to Bitcoin. Like, does that change the MEV landscape?
Yeah, it definitely affects. So we also still I think we are seeing MEV on Bitcoin main chain today, like with Ordinals and BRC20s. And like there are halvening coming, and like runes are launching, and like there is this rare set issue. So there will be definitely a reorg.
So you think block 840,001, which is the first, or I guess I'm actually not sure if it's 840,000 or the next one after. I think it's actually 840,000.
Yeah.
You think that block specifically could be reorged because of runes launch then, and this, if you want this rare set or whatever.
I think it will be reorged.
There'll be a lot of competition there.
Yeah.
To mine that block.
Yeah, I do think so, but this is good for Bitcoin because like you experiment this thing that never happened before, then you can improve the code base like to these kind of things, or you can arrange the incentives if you're a user or protocol developer to make this as smooth as possible for our users. No one like reorgs, right, in the long term, obviously. So I think this is a good experiment, and rollups and like all these L2s that post some kind of data to L1 is also be a good experiment for Bitcoin. So our view in the initial version of Citrea with like this single sequencer and single prover, we are chaining all these UTXOs together. So there won't be any MEV risk. Even though like chain reorged, you cannot change the order of spending transactions because it all depends the previous one. So we will minimize this MEV risk on the L1 in the initial version. And once we introduce this multiple sequencer and like decentralized prover mechanism, then there will be a possibility of Bitcoin MEV. But to also reduce that, we are kind of thinking about Schnorr aggregation mechanism over this BLS thing, so we can still keep this UTXO chaining mechanism so that there is no MEV risk in the short term.
What about like if there's two Citreas, right, or two separate rollups, or I don't know, even like rootstock and Citrea, whatever, a couple of these now. So you've got say an AMM or a lending protocol running on Citrea that someone has built, or running and a similar protocol running on another L2. Both need to let's not use rootstock; it's merge mining is a little bit different. Let's say two Citreas.
Yeah,
you're gonna open source the code. Somebody launches their own version. You've got two pools of capital where trades or loans or whatever are happening in the L2. Both need to post their state. I'm a miner, and I say, well, for some reason or another, let's say I'm running both. So I see that there's a giant arb between the AMMs on each. Do I not try to block one and I do the trade myself on the other one, for example? I can't really, transaction ordering doesn't really matter. It matters inside the sequencer, but if that's secure or decentralized, right? Now on Bitcoin, it doesn't matter, right? The Bitcoin transactions inside a block execute atomically. But couldn't I censor the Citrea like data posting and instead favor the other one where I've done the same trade? Isn't there I haven't thought this through a lot, but that's one of the, I know it's kind of a clunky MEV because you're basically blocking an entire rollups data posting, but is that a thing?
I think it depends on the L2 type. So if you are only posting proof with state diff, once you see the proof, there is nothing you can do. Like you can block it as much as you can, but once you do the trade on the other side, it will go into another proof. So eventually you have to let oldest proofs gone to the Bitcoin L1. So I don't think there is a huge risk there. But obviously, if you can censor this transaction to come into Bitcoin, then there are other risks. If you are able to do that, then you can basically block like all these fraud-proof transactions and like justice transactions of Lightning.
I see. So you could create that. Well, that's true. You could actually. So I see your point. So it's as long as the Citrea like proof eventually gets in, the trade will have still happened on Citrea. We can't actually stop the.
Yeah, all the sequencing will happen on L2. This is like why we are building this sequencer layer and like single sequencer confirmation, because we don't want to create this situation that you described, that L1 decides the exact ordering of the
Right, they
transactions.
say we want this sequencer, not the other sequencer.
Yes.
Right. That would be how they could do what I'm describing. Well, what other risks could they do though? To your point, even on like censoring justice transactions, like that's the one honest like bridge node like says, hey, this guy wants out and he's and it's legit. Like they could block that transaction.
Yeah, so
theoretically.
BitVM is like optimistic protocol, so you need these fraud-proof transactions to happen. But like let's say the majority of miners can basically prevent this fraud-proof transaction to go on chain. So if they collaborate with operator, they can steal the money. But I think this is same for like all the drive chains and Lightning. The only issue with BitVM and drive chain is like all the money is enshrined into a single UTXO or like single UTXO chain. So the risk apart from Lightning is a little bit bigger. But this is why in the long term we want some kind of ZKP verifier opcode on the Bitcoin base layer, because you immediately settle and there is no fraud proof transaction and you are all good to go. You are trustless. BitVM is kind of stepping stone for us. It is like great improvement over the existing L2s like Liquid and Rootstock and Stacks. But it is still not perfect. It is kind of inefficient to use from like end user perspective and operator perspective. You have to do this like front cover liquidity and stuff. But eventually our goal is have a rollup ready for a ZKP verifier opcode and deploy some like BIP, deploy on testnet and showcase the use case. So there is like, we already will see there is a demand on Citrea. And once we have this opcode, then you will have trustless L2s that is way better than Lightning and other solutions. So why not activate this BIP? I think that's the plan in the longer term.
That's a great way to demonstrate it. I think if you can, once Citrea launches and you're posting these proofs using BitVM, BitVM, posting them as you're posting them, and then also using the BitVM bridge and stuff. If you could simultaneously post it to testnet using some ZKP opcode tech and just you'd be able to show like over time as Citrea is being used, like this is how much, how many transactions or how much data or whatever we're having to post to mainnet. Here's how much less it would be and how much more efficient it would be. Because that's often the criticism I see in the Bitcoin developer community of new proposals is, well, show me the use cases. And then somebody may write up, I mean, Jeremy Rubin with OpsCTV has encountered this. He's written hundreds of explanations of use cases for, covenants in general, but CTV in particular. And still critics say, well, why isn't it deployed on testnet? Like someone build something with it. You might be right that there's use cases, but there isn't actually demand. And I don't believe that, by the way, for covenants, but this would be one way to definitively show, add this upgrade, get this benefit.
Exactly, because it works as is, but the only issue is it is trust minimized, not trustless, which we don't like either. It's a great improvement, but it is not a suitable solution for long term. And the other thing is, like you said, all this bridge operations and stuff is kind of inefficient. With OP-ZKP, it will be much more efficient. So showcasing this simultaneously on the both mainnet and ZKP activated testnets will be a great use case,
All right, just a little bit more here. We're almost at time, but the Bitcoin community has, I think, when it comes to L2s, basically put its hat, or the masses have put the only hat they have in the ring is Lightning. That's the only sort of L2 that has the blessing of the majority of the Bitcoin community, the Bitcoiners community, the Bitcoin maximalist community. Is Lightning enough? Like, don't we, even for payments, can't L2s do fast and cheap payments?
Exactly.
I mean, what does the future of Lightning look like versus something like ZK-Rollups?
So we are like deploying EVM ZK-Rollup, and people think, oh, it is EVM, we want payments, we don't want this. Okay, then deploy payment rollup. It is still way more efficient than Lightning because you don't need all this like routing complexity, inbound liquidity, or like channel capacity. Just deploy a payment rollup with. You can also like there's some interesting technologies happening on the Ethereum side. There are some rollup types that you keep your data to yourself, so you don't have to post on chain. So there is only like 200 bytes of data on chain, and you can do better than Lightning with that. It solves all the problems. There is like if there's this ZKP verifier, then it is fully unilateral exit as well. So we can definitely do better than Lightning. And besides Lightning, all this L2 landscape, this can kind of like make the demand to Ethereum and other alt L1s get lower in the longer term because there is this Citrea, which is fully EVM compatible, so you can deploy any application, and it works with BTC and Bitcoin security. So why use this Ethereum and other its alt L1 alternatives? Because you can do it with like world's most real currency and like $1 trillion asset, and I believe it will be more than 10 trillion in the near future. So why not build all of these on Bitcoin? Instead, you can build on like this alt L1s that is not that secure and manage like centralized control chains.
And last, some of the criticism of certainly of inscriptions and ordinals, but even of these new L2s, which I think anyone who's worked in or studied layered scaling solutions knows that rollups are an elite, if not they're at the forefront of layer 2 blockchain scaling. But still, some of the criticism is this isn't what Bitcoin's for. We don't want to make a new way to do financial services on Bitcoin. We want digital gold, hard money, and we want theoretically it to be cheap to run a node or whatever on the L1. What's your response to that criticism?
I support L1 scaling, but it cannot scale to all the people. Like you have to have like 1 gigabyte of blocks to scale all the people. And do we want that? No, we don't. I kind of like support additional increases over the time, small increases, but like 1 gigabyte of block is only enough for like all the users, but it won't happen. So we need to go this efficient scaling solution. So there are like 3 things that you can do. These channels we saw with Lightning, which is kind of problematic. And the other is Plasma, which is the security assumption is not that great. And the third is the rollups, that you can do everything and you can have all the security of the L1. And you can do this, let's say, without the token itself also. So this is kind of like ideal solution for Bitcoin to scale to all these users. I support kind of Covenant. I support OPCAT to enable L1 scaling as well, but it won't scale to all the users. Obviously, we need these layers that make small trade-offs, keeping the security. But let's say it will be faster, but you will be trusted to sequencer for some time, but your money will still be safe. So in that sense, I think having these small trade-offs and moving to layers will solve all these problems of scaling to all the users in the world.
So Citrea, you're going to open source all the stuff you think in, when did you say, in May, a couple months from now?
No, this month, March.
Oh, this month in March.
Yeah.
And then when will like Citrea, your Chainway's Citrea launch? When will people be able to use it, you think?
Hopefully in May, like late April, May.
So you release all the documentation and code this month, and then you get preparing to launch it, use the code. And launch yourself.
Exactly. We will like make this as production ready as possible for testnet, and also we are contributing to BitVM from our like ZK work, but we want to contribute to core BitVM itself also. So this 2 months will be our main focus, the BitVM, making BitVM proof of concept. That's the target. And the Citrea's vision is to make like Bitcoin the foundation for world's finance. So once this will be like launched, then you can deploy all the applications, all kind of applications on Bitcoin. And this is why Bitcoin exists, we believe.
Orkun Kilic, CEO of Chainway Labs, co-creator of Citrea, the first ZK-Rollup on Bitcoin. Thank you so much for coming on Galaxy Brains.
Yeah, it was like very good context, all those like questions and aspects. So thank you for having me.
Absolutely. That's it for this week's episode of Galaxy Brains. Thank you to our guest, Orkun Kilic from Chainway Labs, and my friend Beimnet Abebe from Galaxy Trading, as always. Have a great weekend. Hang in there. Be safe. Take your coins off exchanges and self-custody them if you can. And we'll see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.